Today, we're going to dive into tokenized assets and what that means for the markets. You don't want to miss it. Let's just jump right in. I do want to thank our sponsor today, and that is Coinbase. You guys can jump over to coinbase.com. Use our link. It's going to help us out, but it also gives you guys a little bit of a feedback on when you make your first trade. Available on financing. You can do some Morpho lending over there. They've got a lot, of course, the new credit card, a lot of activity over on the Coinbase platform. Check it out using our link to get started. Now, we're going to have a guest on here in a second, but before we bring her in, I want to frame up something around tokenized securities in general. You've probably seen our videos before with Securitize and Carlos. He's been on before a little bit about Securitize. This is a company, of course, very tied into tokenized securities around BlackRock. This, of course, was a partnership with FG Nexus, which is going to natively tokenize its public shares on Ethereum. So FG Nexus is going to be the first Nasdaq listed company to bring dividend paying preferred equity fully on chain. So we thought, hey, let's get the CEO on and talk it over a little bit. So how are you, Maja?
I'm doing great, and good afternoon to you, Paul. And I just found out we're in Miami together, so it's just great. Good to see you.
It is. It has been great. Listen, I was looking at the Securitize website. There's something interesting about this that I thought was intriguing. If you look at the profile, this being a public stock, I'll zoom in on that so people can kind of see that. Asset class, tokenized public stock. Because some of the other potentials here within the Securitize ecosystem don't necessarily have those kinds of frameworks around how this stock is done. First, let's kind of jump into whether or not this is going to have accredited investment and lockups. Can you explain a little bit more about how you guys went about setting this up?
There is a reason, first of all, why we chose Securitize. I think you were right earlier. I mean, Carlos has been early in this industry. I go back with Carlos early days, when they just started us in 2017, because I was already circling around T0 at the time. T0, Patrick was kind of early in seeing this vision of tokenization. Carlos and Jaime were also early. And I think that one of the reasons we kind of partnered with them is everything that you just mentioned now, you cannot do unless you are regulated end-to-end stack. And that's what Securitize is, right? And so another thing that when we looked at this, we kind of said, look, we need a proven institutional scale. And it's the, tokenization provider behind BlackRock's build, right? First tokenized BlackRock fund on Ethereum. So I think that was another reason why we chose it. And really, we, make equities and payouts programmable. Essentially, this is why we've done it, right? We use Ethereum rails, our underlying asset of digital asset strategy that we've chosen as Ethereum. And we use Ethereum rails for dividends and buybacks and near real-time settlement while keeping the full kind of transfer agent records, right? That's why blockchains are really good, because of that transparency. So that's exactly how also build stream on-chain income to the whitelisted wallets as well. So I think we plug into institutional liquidity, as well. And I think it just allows a much faster, much safer, a much more transparent way of distributing our stock.
Can you explain the Treasury itself? Because we're seeing a lot of digital asset treasuries coming out within this. Obviously, ETH is one of the biggest ones out there. But explain a little bit more. First of all, why go this route? Because there's a variety of ways that this could have been done. Why go this route and kind of jump into a very competitive DAT space right now?
Yeah, good question. Look, I've been early in the space since 2010, and I rode the Bitcoin kind of wave early days, and then I rode the ICO days as well early in kind of 2013, 14, 15, 16, and then DeFi summer later as well. I think what's interesting about this is a massive megaphone for crypto, right? Think about it. Digital asset companies now are suddenly, public. You can discuss them on CNBC. You can discuss them on shows like this, right, where institutional investors are listening. And so I do think that that's interesting. The second part that's really interesting, this is not anymore about hype. This is really about infrastructure. Okay. And so with the reason why we've chosen Ethereum as well is because it is a programmable asset. It's a yield bearing asset.
Right.
It does provide, it's an infra play versus just a kind of, price go up play, right? So there is a reason why we've chosen that as well. And we do think that these types of platforms really allow retail investors to come in and really bet on not just on an asset, but on the management and the future of on-chain economy. And that's part of the reason why we also chose Ethereum, is because we actually do believe on that on-chain economy and kind of build out that's going to happen in that space.
In looking at your site, you guys can learn a little bit about FG Nexus. Just go to fgnexus.io. But you've got your partners listed there. Obviously, this isn't necessarily everybody that's involved, because Citadel's involved in this, DCG's there. First of all, who else is backing this?
Yeah, so what you see on our website, those are partners, right? We have Galaxy as our treasury management, right? And then we have Anchorage and BitGo on our custody. Kraken also. And so we have many investors, right? As you mentioned, Point72, Citadel, DCG. And we've got loads of traditional investors who maybe one thing that is important to mention, when we started to raise, Paul, it was in July. There were 10 other ETH companies that were trying to raise and go to market, and none of them are in the market now.
Oh, wow.
And so I think, again, we named the company FG Nexus because it is a nexus of TradFi and of deep crypto, right? With my background in crypto since 2010 and deep involvement at GE of launching the first trade finance deal on Ethereum between JP Morgan and GE. And then on the other side, Kyle, who worked for Point72 for a long time, and T. Rowe Price, and has a deep experience as an operator, plus our advisor, who's Joe Moglia, who was a chairman and CEO of a TD Ameritrade, right? And so that's a nexus of combination of people that is also very different than from other DATs in the space, because other DATs are either pure crypto bros, as I say,
right? Yeah.
But they're TradFi guys who have a hard time kind of, looping into crypto. What you really need is a combination of two in order to kind of make this a long-term success.
We've had quite a few of them on the show. I mean, we've had the ETH machine on here. BTCS has been on here. But right there, you guys are holding the number 14 slot. So nice move there. How long before you flip the U.S. government in terms of holdings on Ethereum?
I like the positivity. Look, our priority right now is growing ETH per share. So we have a $5 billion ATM that we're using, and I think that's very interesting. The long-term play, really is to also turn this into an operating business, right, and participate in tokenization. So we're exploring some different ways at the moment, but right now we are buying ETH, staking ETH, exploring some DeFi opportunities too. And so the focus in the next, I would say, short-term focus is really just on acquiring ETH.
Well, and the spin, I think, from a dividend standpoint, this starts to separate you guys from many others that when you look at investors that are maybe trying to go in this direction and understand it, because it's not always crypto people that are investing in these companies that are making these plays. If you look at just what Tom Lee is doing with BitMine, it's impressive, because I think he's starting to draw in a lot of traditional finance for sure. What is the difference between FG Nexus and like what SharpLink and BitMine are doing? What would be the thing, your selling position?
Yeah, sure. I think there are a couple of differentiators. One, as I mentioned, is the nexus of people that are involved. We're number one, all operators. There's nobody here that's here for just one trade. I've been in crypto for the last 13 plus years. I came in because of Bitcoin, but I'm staying because of Bitcoin and Ethereum and these programmable assets that are really going to change the way we operate and run finance today. So I think number one is our team. Number two is our operational backgrounds. Number three is our long-term focus of how we actually want to participate in the ETH ecosystem and in tokenization and stablecoins. I mean, look, Paul, in the next couple of months and in the next year, I mean, certainly that short of a period of time, you will start to see a lot of corporate treasuries come out and, launch their own blockchains, launch their own stablecoins, try to get yield on that, right? That's the name of the game, right? Because this technology has been able to unlock some incredible ways that people can, decentralize and can earn revenue. So I think we are really well positioned because we're all builders and we come from a kind of a builder mentality, very global mindset. You know, Miami is the 16th place in the world I live in. I operated in emerging markets for over 8 years, understanding how money moves. I started in mobile payments in Africa and LATAM. And so I think this is just a natural progression. And so for us, if we believe in on-chain economy, then, you know, this is a long-term opportunity. And plus, having a vehicle like this that we do, which is a publicly traded vehicle, it's a huge opportunity, because think about how many crypto companies want to go public, right? And this becomes a vehicle through which you can acquire some of those assets.
What are you guys using for, you know, staking and earning yield?
Yeah, so our partners on that are Anchorage and BitGo. We've chosen that in the beginning. We're not doing any of that on our own. So Anchorage and BitGo are our partners at the moment. We will obviously expand that to other partnerships once we expand our ETH holdings too. But we are starting with staking only, because remember, right, crypto is still very nascent in the sense that there's a lot of smart contract risk, and the higher in yield that you go, the more riskier it is.
Sure.
Yeah, and because we are a publicly traded company, everything is public, everything is reported to SEC. We are looked at under a loop, so we have to be really careful of how we explore the next opportunities in this.
In terms of paying out dividends, because I know, Charles, with BTCS, they did a little bit of a payback, so to speak, if you were holding shares. How does it work with what FG Nexus is doing around the dividend payouts?
It does get interesting around our perpetual preferred. Maybe I can answer that question. You know, traditionally, if you hold preferred shares, right, dividends are processed through layers of transfer agents, clearinghouses, custodians, right? It's slow, messy, definitely not real time, right? And so what we're doing is tokenizing those preferred shares on Ethereum. And that means that dividends are declared. The payout can be, streamed directly to the holder's wallet, essentially, automatically on chain to whitelisted investors. So in the same kind of legal dividends, same rights, just delivered through a blockchain rails instead of legacy intermediaries. But that's the only thing at the moment that we can discuss in terms of our dividend.
No problem. I want to revisit, Maja, back to the idea of KYC versus non-KYC. So this is kind of the framework that's being looked at out there right now. And this is the example I was giving you earlier on XStocks, non-KYC, no walled gardens. This is kind of what's happening, I think, maybe around next generation investors versus where we will see traditional finance investors move to. I'm just kind of curious, when you look at those two, do you think that's two separate markets, or do you think they could start to kind of blend?
I love it. That's such a crypto native question, and I can tell that you've been doing this for a while. Look, if you ask a traditional and hardcore crypto person, they would probably tell you no KYC, right?
Yeah.
I think being realistic in the world that we live in, I think it's a blend. It's not it's going towards a blend, not a kind of a separation. I think traditional finance isn't just going to disappear. It is evolving. So, I do think that you will need to have KYC, and a lot of instances that won't just go away. I do think, though, to your point, you will have two separate worlds. You will have a crypto, which you have till now, right? Mm-hmm. You have a full-on crypto world that runs without KYC, decentralized exchanges and et cetera. And then you have the world of Coinbases, right? And that has to operate under certain rules under SEC and other regulatory authorities around the world. So I do think that both will exist, but I do think that they will blend in some capacity.
Interesting. Because I think the transition is going to be there. You're right. It's not going to be just a one or the other kind of situation, because it's going to take years to kind of get this rolling in. But I'm very intrigued on which one is going to get the most speed to market, in terms of uptake, especially with new generation investors coming in. If you think about Gen Z and younger millennials who are going to start acquiring some wealth here, especially during this bull run, this really may open up some opportunities there for both, possibly.
I would say it depends. Imagine if tomorrow BlackRock decided to tokenize trillions of dollars of their assets. Yeah. I mean, do you think that would be without KYC? No.
Probably
right?
Not.
So it depends, right? If you have a massive player in traditional finance that has a lot of assets and it comes into a market, that will probably run a little bit more traditional, right? It will
Yeah.
require KYC. Now, the rest, I think you're absolutely right. In the traditional crypto markets and retail, I think that will run much faster, but it would not, it will still require large amounts of volume. Because remember, crypto still needs a lot of liquidity, and liquidity comes from institutional finance.
Yeah, for sure, no doubt. And that's, I think, the strength around it. But then you got to look at the global trade mechanism that's out there within, even if you go back and look at what's happening with Polymarket right now. We just did a show on this where Polymarket obviously trading with, or now partnered with ICE, which is owns the New York Stock Exchange. That starts to change things pretty quickly if we get into a global community around something like that, just on the prediction market side of things. So a lot of opportunity. What about S&P 500 companies and them putting assets, digital assets, ETH or Bitcoin on their balance sheet? We're starting to see more companies going in this direction. What do you think they're going to choose? A McDonald's, a Microsoft, an Apple? Would they go ETH or Bitcoin?
I think they'll go Bitcoin.
Why haven't we seen that happen yet?
I think you're starting to slowly see it happen.
It's at an all-time high. What are they going to buy the top here? What's going on?
By the time you and I were doing the show, it's back at 120, I think.
Yeah, probably.
By the way, but markets have come down significantly, I think, since this morning. But I think, look, Paul, I think you and I can agree on something. People like you and I are very impatient. We've been in crypto for a while and we want things yesterday. So look, I think things are going to happen. It takes a while, right? I have real conversations with family offices and CEOs of companies.
Yeah, for sure.
One question that I get all the time is, why would I own an asset I don't even know who created it? I have to start there. Yeah. Right? I have to start in answering a question of who created Bitcoin and why should we own it, even though we don't know the answer to that question. And so remember, that's quite a lift, right? So I think a lot of people.
I remember those questions and those answers in the early days of the internet. Why would I own an asset that is a pet rock? Yes. We had those conversations with people like that.
But we still have them. To your point, we still have them. So people are, thinking about it. However, I don't know if you've noticed what happened in the last couple of days with government shutdown. Basically Bitcoin and gold have gone up, right? These hardcore assets have gone up, right? And I'm not sure it's not specifically because government was shut down, and that's the reason why everything, surged. But I do think it's a combination of things, right? It's really people losing kind of faith in the government, and really U.S. dollar has gone down 11% this year. That's not a small amount.
I think that you've got such a framework right now setting up. Regulatory framework is coming into play. The markets, of course, themselves have started to create a lot of froth, whether you look at gold, the S&P 500, where Bitcoin is, and the opportunity, even if you look at silver, the opportunity, I think now a lot of companies on the sidelines are thinking, I'm holding dollars over here in my treasury, and I'm losing all this opportunity as my dollars debase. So that is my real question, even though there are opportunities to invest in companies like yourself where you can kind of leverage against that. So there are some benefits that. Let's talk about the potential, obviously your background with GE and integrating blockchain, especially if you look at supply chain, you look at provenance, the potential. That was where I first started in crypto, was learning about crypto and the early days of how supply chain was going to be utilized. And when I first looked at it, that was where I had the most skepticism of the use case, because it was way, way back in terms of what we've seen now in terms of smart contract development. But do you think we'll see companies like GE, someone like that, or maybe a McDonald's, hold Ethereum or start to put more of their own infrastructure on blockchain?
Yeah, absolutely. I think it's funny you mentioned supply chain. Early days at GE, I had companies who were building that, who came to me and said, "We are disrupting supply chain with blockchain," and to me that was that was the worst. Yeah, I remember IBM launching Mangoes on blockchain, right? Remember that? Well, it was, to me, it was complete BS, to be very
Yeah,
honest.
it
I
was.
thought
Yes, exactly.
this is crazy. This is not how you use these things. Number one use case for me at GE when I went to present, because I brought Joe Lubin into GE early days, was data analytics and predictive analytics. It was the IoT. That's
Yeah.
where you had AI agents and machine learning combined with blockchain, right? And this is 2016, 2017. We
Okay.
talked about this,
Yeah.
right? That's where the real use cases are. And that the companies are already doing, right? Because remember, industrials were earliest in machine learning and AI. They've been doing AI machine learning for the last 20, 25 years when it wasn't a really sexy conversation. So
Yeah, for sure.
I also had an idea to use the actual electricity from airline engines, because when GE produces turbines, they have to spin them for reliability reasons. They produce 120 megawatts of electricity, and I wanted to use that electricity, offtake it, and mine Bitcoin, right? But I wasn't allowed to do that because, quote, Bitcoin was used for porn and drugs, and therefore I couldn't do it. It's really early days. And so I think, look, the companies will start to, a lot of companies these days have a little pilots on the side. And so they will start to use Ethereum or other L1s to try to test the real use cases. Absolutely. And I think that this is exactly what they should be doing.
Well, I think we're going to start to see it. It's going to make its way into mainstream, business, especially in understanding how these markets play out. My last question for you, Maja, is this. When you look at the market of tokenized securities and you look at stablecoins, all right, so consider the growth of L2s, the potential here for both those two markets, stablecoin versus tokenized security. Which one do you think is going to be bigger?
Good question, and a tricky one. Depends on the time frame.
Let's give it the 5-year window. That's a reasonable window, I think, for both stablecoins.
So look, stablecoins are already huge and growing fast. We know that, right? We're talking close to what, 300 billion in circulation today, approximately. Okay.
Yeah. Across the big guys, yeah, for sure.
They're moving trillions of dollars annually, okay, especially through emerging markets and crypto rails. That's a fact. Now, tokenized securities are just starting, but that's where the deep capital pools are. I think the equities, treasuries, funds, the BlackRock tokenized treasury fund is already past 1 billion on Ethereum, and DTCC's project Ion is processing, I think, over 100,000 transactions a day on DLT. So over time, in the next 5 years, I could see potentially that equities, bonds, and funds move on chain much more, and that this kind of market goes into trillions. Think of it this way: stable coins are the rails, and tokenized securities are the trains. That's the way I would think about it.
All right,
so you then decide.
I'm in agreement with you on this one. I feel like tokenized securities are the bigger play, just because the acceleration mode, and also I think, Wall Street is catching up. Versus the problem that you're going to have with the banking system. Now, granted, if the banks start to embrace stablecoins and we start seeing banks printing stablecoins left and right, maybe I would consider it, but I just know how slow the banks are moving, and I'm watching the speed in which BlackRock, JP Morgan, the likes of Securitize and others are moving. So I'm kind of in agreement with you. I think tokenized securities are going to make it as the winner here. Maja, it's been great having you on. Thank you so much for coming in today. We appreciate it.
Thanks so much for having me on.
All right, guys, make sure and get in on the Diamond Circle. That is our private group that you guys can join for absolutely free. It is an email that comes out to you. Basically, I give a rundown on the markets. Sometimes I'm looking at certain projects. You'll get inside my brain, and my team's brain, to kind of understand where these markets are going, because it's starting to get heated. So click the link down below. Of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.